All right, well, seekers, well, let's dive in. So, yesterday I showed you like during a downturn or a market crash like 2008, 2001, I believe there was 2018, 2020, 2020. So, we've had over the last 25 years, we've had about four or five like decent pullbacks, like big pullbacks. And I showed you yesterday, like, one type of investment you can get into during pullbacks that would continue to make money for your portfolio, which is really cool. And then I kind of said, well, can you see the pullbacks coming in the future? And the answer is actually, yeah, you can. Now, your financial advisor probably won't tell you that, or your professor at school probably won't tell you that. The talking head on TV won't tell you that here. But there's a dominant cycle. And that's a lot of what we do in the Generation Wealth Investment Club. We kind of look at like cycles, project them into the future to give us an idea of like good buying points. Are they 100% accurate? No, which is why there's nothing 100% accurate in the market. There's nothing. There's not one indicator that's 100% accurate in the stock market, which is why we use that and a few other things to help guide us in and sometimes guide us out, so that we don't take those big hits down, wait for markets to recover, get back in, take them back up here. And that's how we maximize our returns. That's how we beat the market effortlessly, is by doing that. We don't buy and hold and wait and sit. We use these cycles. And so let me show you what I'm looking at. That way you can get an idea of that it's possible for you. Okay, so number one, let me pull this one over here. Okay, so a couple things to explain. One, the black line is the Dow Jones Industrial Average. Okay, we got it from 1993 to 2010 in this one, and I'll show you a more updated one as well. The red line is what we call a cycle. It's a predictable pattern from the past projected into the future that can show us where the stock market going. Now, is it 100% accurate all the time? Like I said, no, but check this out. What the cycle does, it doesn't tell us how much the stock's going to move up or down. That's not the point. What it's here to show us is high point, low point, high point, low point. In fact, let me just grab this here. And let's do this. Let's change you to, maybe we'll do blue, right? And so what we got here is we got high point, low point, high point, low point. And generally speaking, what you want to do is you want to buy at the low points and maybe not sell at the high points, but hold at the high points. Or if we see a longer downtrend coming, like a market pullback, sell and get out and let the market pull back and then get back in. And so, like I said, not every high point is a time to sell. Not every low point is a time to buy. But what we do tend to see is when we hit a low point like right here and move into a high and then move up into a high point, the market tends to move up with it, right? We're in an upward direction there. Okay, then we get these low points here. So that's 1998. Market pulls back. Sometimes it's a big pullback. Sometimes it's a small pullback. But you can see a pullback right there. All right, but this kind of indicates it's time to get back in. Market's going back up, and look at that. That's exactly what it did from that point and went all the way up. And we had a nice little high point right there, and then the market pulled back. Look, notice the years. This is 2000, 2001 to 2002. What happened during that time? The dot-com bubble, the big pullback. I actually just showed you in the video yesterday. I'm sorry, I didn't show you 2000 yesterday. I showed you 2008. But 2000 to 2001, 2002, we had this huge pullback. I think about a 50%, 40 to 50% pullback. So we got out up here, or somewhere around there. We don't usually get out right at the top. We get confirmations, and usually we'll get out somewhere around here. So we'll be down a little bit, come down, but we start to buy back in over here. Confirmations, we go to the upside, and that's exactly what we do. Now, 2004 did show a cycle top as well, and that was that top right there. Didn't really have much of a pullback, so that was an example of it not really pulling back much. We would have stayed in at that point and just added more to our position right around here in 2005. And then look at that, a nice big upswing. Says we're going to a high, and that's exactly what we did. And boom, 2007, 2008, 2009. Huge pullback. Market pulled back like you saw yesterday, close to 50%. So, you were selling out here or shortly under it, maybe around there. And we were starting to add back in down here when the cycle said to add back in. And boom, look at that. We took it up. Not bad, right? Not bad at all. Let's look at another example. Let's look at an example that's actually more recent. Okay, so let me pull this up here. Okay. This cycle runs us from roughly about 2018 to 2020. I'll talk about 2020 in just a sec here. Very interesting stuff. Okay. So again, cycle high right there and market high. Then looks like, this is saying, hey, there might be a pullback coming. Be prepared. And look at that. The pullback happened. Stock market's in black, cycle's in red. And then it said, here's a bottom. It looks like we might have an upswing coming. And there's your cycle top. And look at that. We hit our top. Let's move that over there. We hit our top right there. And then a pullback. Now, this was a short pullback. This wasn't a big pullback right there. We had a nice little pullback. So we probably would have stayed in for that one. Anything that's like less than 10% pullback, we usually just stay in for them. We just start adding to our positions near the bottom. Nice little uptrend right there. Market went up with it right there. A little pullback. And then now we're into 2019, market high. Again, not much happened. We got a high zone there. Kind of went sideways a little bit. But this did say, hey, we got a buy zone coming up. And boom, there's our buy zone. Okay, taking it back up. Cycle high. Now, this was early. We reached it before with cycle high. But, within proximity, these aren't exact to the day. These are more of a timeline signal. And then what happened? Does anyone remember what happened in 2020? Right? Cycle predicted we were going to go down. And it was going to be a short one. Look, down for about a month, 4 to 6 weeks, and then we're back up. What happened? 2020, COVID. You couldn't get toilet paper off the shelves. Remember all that? You were forced to stay home, all of that stuff. And anyone that was watching the market dropped about 40% between the high point of December and the low point February, March time zone. So right about here is when we hit our bottom and we start to go back up. Now, if you're like, yeah, right, Mike, go check the starts. Go hop on Yahoo Finance or whatever site you use and go check 2020. Our bottom was roughly end of February, early March into April, so right in that time zone, and then we went up from there. And then the cycle continued into 2022 and showed us that next pullback happening in 2022, and we followed that. But that's it. That's the cycle. And so, do we follow it blindly? No. We got other indicators that help us guide us out of that, confirm exactly, basically we have indicators that are going to confirm what that cycle is showing us. And if the market does start to pull back like it does, or like it's showing, we get out. We keep our positions in cash. We wait for another opportunity to get back in. Usually it's the bottom of that cycle. So to start getting back in, we obviously confirm that before we get back in. And this is how we avoid these big losses and these big ups and downs and these years where you kind of just go sideways. Ooh, nobody wants to do that, right? So the question is, when is the next pullback going to happen? Well, that's reserved for the Generation Wealth Investment Club members. That's what we're showing them and teaching them here and walking through, and that's what we're looking to the future for them. So if you want to become a member, moneycoachmike.com/call is where you can do that. Hop on a call, free call. There's no obligation to become a member, but we can take a look at where you're at, see if it would be a good fit for you. And if it would, I can walk you through what we do, exactly how we do it, and how it could benefit you. And if it doesn't work, no pressure at all. But if you want to up your investment game, maybe you're a newbie investor and you're like, how does this all work? I don't love what my financial advisor's doing. I want to do better than that. This club's for you. If you're advanced, maybe you've been around for a while, you're looking to just get that competitive advantage, that extra edge. In this club, we work with you as well for that. All right, so hopefully you guys get excited. Hopefully you guys can see, we can predict the future. We can look into the future and say, hey, what's going to happen? That's exactly what we do using cycles. All right, we'll see you on the next one. Bye for now.